Hello everyone, my name is Aashish Somaiyaa and I am the Managing Director and CEO for Motilal Oswal Asset Management Company. I am here to talk to you today about why we think investors who are investing in equity markets, why do they need professional advice or why do they need support of professional management. And at the same time, I'll also be discussing the role of investment advisors in the entire investment process. So basically, across over a period of time, if you see newspapers, if you see popular literature, if you see a lot of magazines, if you see books written by some of the brightest people, on and off we come across this entire discussion and entire debate about whether investors should be getting into the DIY or the do-it-yourself mode, or should they be regularly consulting or engaging the services of investment advisors. And according to me, I think it's a very, very interesting debate. More so because, if you see with the online world becoming pretty big in our day-to-day lives, there are in fact a lot of do-it-yourself kind of options which are coming up. And I'm sure that, investors also get a lot of conflicting news items or a lot of conflicting stories with this entire emergence of direct plans in mutual funds is also concerned. And I speak to a lot of my advisor friends, I speak to a lot of my distribution partners, and a lot of them have a lot of concerns and a lot of doubts or queries, specifically with regards to emergence of online as well as with regards to the emergence of direct plans. Also, you see a lot of newspaper items which talk about what kind of corpus of mutual fund companies is actually coming through direct plans. And given these kind of trends as far as regulation is concerned, and given these kind of trends as far as new technology is concerned, what really is the role of investment advisors, and how are advisors still important in the life of a investor? So obviously there are various opinions and various ways of looking at it, but I find it important to share my perspective on the same, and I'd like to thank you for giving me patient listening. I think there are 4 or 5 very, very important points in terms of this in terms of this discussion about role of investment advisors or distributors. Most important of them is, I like to take examples from Bollywood, because I am a keen follower of Bollywood, and I don't watch movies only for the perspective of entertainment. But why I'm bringing Bollywood in the picture is because I feel that a lot of times a lot of insights can be gained by following some of these stories. So I'll start off by giving you one such example, and one of our all-time favorite movies is Munna Bhai MBBS, and obviously Mr. Baman Irani is a favorite of most of the people who follow Bollywood. In that extremely popular movie, when he is teaching a medical class, he actually comes up and says that when I'm the best surgeon in the world, and I have a rock steady hand when it comes to performing surgeries on the entire world. But when it comes to operating my own daughter, I'm not sure if my hand will remain rock steady. And I think it came across as a, while watching a movie, it just comes across as an innocuous statement. It just comes across as if some doctor is talking something, but it's a pretty deep message. Basically, what it says is that one needs to be able to control one's emotions. When I'm giving advice to you, when I'm giving advice to 20 other people, when I'm managing money for a lot of other people, I do it as my profession, and that is what I'm trained for. But when it comes to actually managing my own money, am I as unemotional? Am I as dispassionate? I think that is something to be thought about. And here we always give this very, very common example. Let's say that you as an investor have actually bought 2 shares, both at a price of 100 rupees. And normally we make equity investments for the long term, but obviously there are times when you may need money. So let's say you bought shares of 2 different companies, each for 100 rupees. And after a couple of years of making that investment, you actually feel the need for money. When you go back to evaluate the position of your investments, you find that one of the shares which you bought has traveled from 100 and the value has become 150. And the other share which you bought, the value which you bought at 100 has actually depreciated to 80. And now you need about, say, 50 rupees. So which one are you most likely to sell? The one which moved from 100 to 150, or the one which depreciated from 100 to 80? Which one are you most likely to sell? I don't have a mechanism to take your answers now, but my experience of dealing with a lot of people tells me, my experience of dealing in my personal investments also, it actually tells me that all of us are most likely to book profit on the item which moved from 100 to 150, and most unlikely that we'll actually sell the item which moved from 100 to 80, because that's going to result in a loss. Now, the whole point is that this is the entire benefit of having a third party opinion or having a third party managing your investments, because when you manage it yourself, you tend to have emotional reactions. In reality, 100 becoming 150 or 100 becoming 80 has nothing to do with the selling decision. When you actually go back to evaluate, you should be seeing whether the item which was 150, does it have to have the potential to become 200, or the item which was at 80, does it have the potential to make 80 into even 50, 40 or 30. I think that's the single deciding factor, and investment advisors obviously play a huge role, because apart from just bringing knowledge to the table, they'll ensure that your decisions are dispassionate and unemotional. I think that's just one important point. The second important point, when it comes to do-it-yourself or direct plans, what I've seen is that, I also, like I said, that, in the first example I compared with Bollywood, I also feel that a lot of times a lot of important lessons in our industry, especially related to distribution, they can be drawn even from the pharmaceutical or the medicine kind of industry. The reason is very simple, that, when you speak about these direct plans, there are 40-45 different asset management companies, each having 15 to 20 different funds. And if we were to say that investors should go directly to asset management companies and procure whatever or invest in whatever funds that they think is the right thing, let me tell you very honestly, to all my investor friends as well as distributors, let's say if you walk into my office or if you log on to my website and you try to figure out which is the best fund, obviously Motilal Oswal is the best fund. In my office, if you walk in, is most likely you will be told that Motilal Oswal mutual fund is the best mutual fund. I don't think that you can walk into my office or log on to my internet site and find an unbiased opinion about what is the best thing for you. Why I said we should compare this sometime with the pharma industry is because if you actually let, I'm giving an exaggerated example, I know it doesn't work exactly this way, but if you actually left it to pharmaceutical industries to go about peddling drugs to so-called patients or their end consumers, then I'm sure that they would make every patient believe that you are suffering from 1, 2, 3, 4, 5, 6 different things, and my drug is exactly what you need. So it's almost like saying that in the pharmaceutical business, you should not be consulting doctors, and you should not be consulting compounders, and you should not be consulting pharmacists, and you should just have companies offering medication directly to the end consumers. What would be the actual situation with consumers then? So obviously, we are not dealing with as life-threatening a domain as the pharma industry, but I don't think that financial health is any lesser than physical health. And from that perspective, I think that yes, there are a lot of investors who are very smart. They know exactly what they require. They have the ability to judge and gauge and evaluate exactly what they need. So I'm sure that there are a lot of investors who know exactly what they need. They have all the knowledge and the capability to evaluate different options and to see what is good performance, what is bad performance, how markets are moving, what are their own requirements in terms of implementing their financial plans. So I'm sure there are a lot of smart investors who can definitely go through the DIY or do-it-yourself kind of mode. But for the vast majority of the population, I think that directly dealing with asset management companies and trying to figure out amongst 40 different AMCs which one is the best, who is giving great performance, whose products are ideal for my requirements, I think that's going to be quite a maze. And from that perspective, how much you should pay your advisor, what kind of fees the advisor should be charging, what the earnings of the advisor should be. Should it be a fixed fee or a profit share? Should the advisor get money from the manufacturer or directly paid by the investor? These are different modalities which an advisor and distributor could agree between themselves. But the whole point is that when we actually speak about do-it-yourself, one must keep in mind that financial wealth or financial health is as important as physical health. And here again, I always, like I said, draw some inspiration again from Bollywood. The very famous dialogue, which is mentioned in one of the movies. And, I always ask this question to people, that when your medical health is not in the right shape, you know that you should go to a doctor. But when your financial health is not in right shape, normally you come to know much late. And do you even know who to go to? So what happens if your medical health is not fine? And what happens if your financial health is not fine? When your medical health is not doing okay, in the worst case, of course, we will die. But when your financial health is not okay, you will definitely not die, you will live, but you will live a painful life. And this is very well captured in one of the Bollywood dialogues, because what it says is that जिल्लत की ज़िंदगी से इज़्ज़त की मौत बेहतर होती है. So as usual, it's a slightly exaggerated kind of statement, but I think that when it comes to medical health, you don't do it yourself or the online way. And the same perspective, I don't think you are an expert yourself at all points in time. So as far as financial health is also concerned, you may ultimately execute the transaction online because you find that more convenient. But the whole point is that you will definitely need a financial advisor to tell you what the right thing for you is.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.